let's start. Welcome everybody to the second whiteboard video we're doing. Now, as you guys all know, if you have watched the previous whiteboard video, we're going all over the basic subjects of trading, how it works and how to get into it. Now, for the people that are coming in new, make sure to also like and subscribe, and also turn on that bell notification to get notified when I get on a new video or go live. So, as we're doing a new whiteboard video today, we're having two new subjects, and they're going to be based upon candles, and they're going to be based upon types of executions. These are the couple basic things you really have to know before you're going into trading, because you see a lot of people are going blind into trading, just put orders in the market and they don't even know what they're actually doing. So as a start, we're going off with candles, because of the previous subjects we've done. It's good to start off with candles, and how candles work. So yeah, let's go ahead. So we're having pretty much two types of candles. We have a bullish candle and we have a bearish candle. A bullish candle is a candle that's pretty much pushing the price up and closing higher at the pretty much from the open price right over here to the close price right over here. The candle has pushed up, and it's vice versa for the bearish candle. So let's write them down to show you guys exactly what it looks like. Let's write two candles down. This isn't the best setup for the board currently, so it might swing a little bit, but don't worry about that. So, good morning. So, we're having pretty much two types of candles, as we said. Most of the time, on your preferences of color, green is going to be the bullish candle in this market. So, let's make that green for a moment. And currently, most people use red as the bearish candle. Marked it up red for the moment. So, what's important to note on these candles is that we have certain open prices, certain highs, certain lows, right? And that's what you have to start understanding about a candle, because all candles are based upon time frames. Now we're going to go into time frames on a later subject, probably the next one, and then after that we're going to go into a little bit more structure. But first we have to understand what a candle actually is, right? So let's start with the bullish candle. At the bullish candle, we have the open price right over here. This is where the candle opens, where pretty much a new candle, this candle has started. Now, on that open price, we also have a close price. And the close price is higher up because we have a bullish candle, right? The candle went up, so the close price is going to be higher. As we all know, well, not all know, that's why you're watching this video, but as we know, the close price right now is going to be over here. So open price on the green candle, close your price on the green candle. Now, for some people, they might, ask themselves, like, what are these little things? Those are called wicks. Again, we're going into a later subject of that later on. But first, we have to identify what they are. Now, as you can see, this is a bullish candle, right? On the bullish candle, we have a wick here to the downside. And that wick has created the current low for the candle. That's the low of the candle. And then the top side, we have this little wick that's created over here. And then the top side, this is pretty much called the high of the candle. The high, the low, open price, close price, right? So, I hope that's pretty clear. We're going into the next candle now. It's pretty much vice versa, but let's go into it. So, over here, we have a bearish candle. As you can see, it's a red candle, and let's go into it. Over here, we have the open price of the candle. Price opens, and obviously, as we have talked about before, the candle is going to go down. So that means that the closing price is going to be lower, right? We have the closing price right over here. And that closing price made price pretty much go down, as simple as it is, right? Now, again, we have those two little wicks. And again, at the same thing, this little wick to the top side has created the current high for the candle. And this current little wick to the downside has created the current low for the candle. Now, some people might already think, yeah, and then we're going to get into wick fills and all those things. Those are for later subjects again. But now we covered candles. Hopefully you understand it. Note it down for yourself. Go deeper into it a little bit. Watch the chart for a little bit. See, oh, here it opens. Now it's going to close. And we have all types of different sort of candles. We're even going to call them certain pin bars as an example, doji candles. But we're going to go into later subjects on that. But overall, this was the subject on candles. Hope you understand. And let's go into the types of executions now. These are all follow-up videos. You might think, hey, this is a little bit different than candles. Yes, it is, but soon it's going to make more sense. Let's remove this for a moment. So, now we're going into types of executions you can enter the Forex market in. Now, what's important to note for yourself with these executions is that you have to use the correct ones. In my opinion, I have a certain couple ones that I use, and I have certain ones that I don't use. Now, we're going over the most basic one, and that's called a market execution. So let's call that an ME for the moment, market execution. And a market execution pretty much lets you directly step into the market with a buy or a sell. Simple as it is, directly get you into the market to continue moving up or to continue moving down. Now, you also have pretty much orders that you can set into the market for price to tap for you to get in. And there's 4 types of different orders based upon that. So let's start with the buy stops and the sell stops. Now, as a buy stop and a sell stop, you can put those orders into the market. Let's put them up for the moment on the board. So we've got a buy stop and we've got a sell stop, right? What a buy stop and a sell stop mean is, let's say price is continuing up, right? And you have a buy stop above that level. So let's say we are continuing up and we have a buy stop set over here. So the line is the current buy stop. We can also make that green as a buy. As an example, we have a buy stop right over there. Now we're talking about a line chart for the minute. That's the same little bit as candles. Let's see. These could be candles as well, but you have to just put that in your mind for a moment. If a buy stop is placed right over there and price decides to push through that buy stop, then we get automatically into a buy position. Now, what's important to note about buy stops and sell stops is that you're always buying high or you're selling low. So that's why I don't personally like those too much. But let's get into sell stop right now. Sell stop is the exact same, but vice versa, right? Make this line for the moment and make it red. So, and that for the people that still understand, it happens when the price pushes through. And it's vice versa with a sell stop. When price is going lower, and you're expecting price to break, and they're swinging, this zone, you're expecting pretty much a breakout or a push further on, then you put that pretty much that sell stop in, and once the sell stop got activated, you enter a sell position. As I said before, I don't really like them, but those are pretty much the ones people use the most. And now we got 2 more different ones, and they're buy limits and sell limits, and we're going to talk about them right now. So we got, let's note them down for the moment, and we got a buy limit, I hope you're able to write that, and a sell limit. Now what buy limits and sell limits do, I personally use them a lot more often than just buy stop, sell stops. I actually never use pretty much buy stop, sell stops, but what they do for you is once price gets up to a certain point where you expect price to maybe do a retest or reject away from, you can have an order set in high up top for you to start selling or for you to start buying. So let's say you had a previous breakout at a zone. Here we had the breakout, right? And price is pushing on, just making a new lower low. We're going to get into that later. And price starts pushing back up, right? you're expecting price to retest a previous level where you want to start selling on. So you set a sell limit right over here. Now, once price starts pushing back towards your sell limit over here, you automatically get put into a sell when the market is actually driving upwards, right? For the current moment, let's put a little arrow down, right? You get into that little sell that you pointed out here at the break of structure. We're going to get into that later again. And you expect price to start moving down from here. I like them because you never buy high and you never buy low, sell low. Pretty much what you do is you sell high and you buy low, right? That's the same vice versa again if you do it the other way around. So let's say we have a resistance formed and we have a break of resistance which creates a break of structure, and when price starts pulling back, you have set yourself a nice buy limit over here. Hopefully you're able to see that. So a little buy limit. It's not that bright, but it's okay. It's okay, don't worry about it. Once price comes back there to that level, you're expecting price to continue further up again. So that's pretty much the buy limit. So hopefully you gained some knowledge out of this video. Hopefully you liked it. Make sure to like and subscribe to this video and check out www.luketradeslondon.com. And the next video is going to be there Sunday again.